I've already talked about what wasn't so great in Microsoft's quarter. Just because there was so much that was great, and clearly the stock is up. What was the most encouraging thing to you about the numbers that Microsoft turned in?
I'd say two things, John, and thanks for having me. First would be the guidance for Azure. As much as the results from Azure at 49% constant currency were outstanding, the guidance for it to only decelerate by 2% around 47, gives you an idea that this demand is very consistent and durable. And I'd say secondly, and perhaps more importantly, the fact that Microsoft's willing to go out today and start talking about their fiscal 23 in terms of double-digit revenue and operating profit growth, again, gets back to the idea that these are durable growers. And what you have with these software companies and these big enterprise software companies are companies that have great visibility in their pipelines, and the demand trends around areas like cloud, broader digitization of the enterprise, you all remain in very good position, despite a lot of the macro overhangs.
Now, what concerns me, not about Microsoft specifically, but the read-throughs, are consumer and marketing. So consumer PCs, not so strong. Commercial was strong and made up for it. Xbox services, not so strong, but they did some better on the supply of the consoles themselves. And then within LinkedIn, lots of talk about talent and how much money that was pulling in. Not so many details around marketing. Are those things that we should be thinking about in terms of impact on other stocks?
Well, Mark Mahaney could probably better discuss some of that with you on the internet side. I'd say why I think software deserves to be discussed a little bit differently than tech in aggregate is that you're servicing the enterprise. The enterprise can't make decisions overnight around spending plans. These are very durable pockets of spend that are going to continue as every enterprise to a certain degree has to invest for the future. And so obviously Microsoft does have pockets of consumer exposure in areas, as you're mentioning, Xbox, PCs, but the enterprise part of Microsoft's business is the part that's growing the fastest. So the mix shift is working in your favor today in terms of the durability of growth. And that is very, very different from where Microsoft was in 1999. And frankly, why it deserves a market multiple or a multiple that is above the market.
I mean, Kirk, that call was just so positive from the first question. Satya Nadella saying that their tech stack is just more competitive, that they have pricing power. Do you think that this is a Microsoft thing or an industry-wide thing? Can you read through what Microsoft is seeing in enterprise to some of the other names in this space, or is enterprise just getting bigger and taking more of that share from them?
Well, I think Microsoft's executing really well. I think you could separate it into two buckets, if you will. On the enterprise or public cloud side, Microsoft's doing really well. But I think the pie is growing at a rate that's going to support really good growth from both Google and Amazon. We've said that over the last couple of years. This is a broader TAM expansion that multiple players are going to be able to benefit from. But I think what you've also seen from names like SAP, and I think what you'll hear from ServiceNow tonight, is that enterprise demand is very steady. Companies have to continue to invest in the digital strategy to compete longer term. And I think every CEO is just more aware of technology as a competitive differentiator today versus 5 or 6 years ago.